Look at this, everyone. So Dow futures, little change after we saw an 1,100 point drop and its 10th straight loss. So the markets have been very overvalued right now. And we had the Federal Reserve interest rate decision today. And to no surprise, they cut interest rates by 0.25%, 25 basis points. But it wasn't that scared the markets. It was that they said, look, going ahead, we're not going to cut interest rates as low and as fast as we said before. I think they know because they've created a huge asset bubble and they created asset inflation. And just look at the VIX today. The VIX was just coasting and absolutely skyrocketed. And once that goes over 30, you know there's going to be a lot of volatility and a lot of uncertainty in the markets. We can see it was up 74% today. So let's go into what actually the Fed said and what they announced today. So again, they cut by 1/4 of a point, and they've indicated fewer reductions ahead. So the Federal Open Market Committee cut the overnight borrowing rate from the range of to a target range of 4.25% to 4.5%, back to a level where it was in December 2022. And he said today we're closer, and they've decided that this is the right call. But I'll get into a bit deeper. There was a bit of drama at this last Fed meeting, some drama that hasn't happened since 2005. The Fed indicated that it would only lower twice in 2025. But again, I'll get into the markets and the bond market. Love you too, Mickey. May be thinking that there may be no interest rate cuts in 2025. Okay, so let's get into this. So assuming 1/4 point increments, officials indicated 2 more reductions in 2026 and 1 in 2027. So they think the end goal, their goal will be a rate of 3%. Now, the thing with these, they get changed all the time. So I'm sure we will see more changes as we get more data and more information. I'll make this a bit bigger so it's easy for you guys to read. So for the second consecutive meeting, one FOMC member dissented. Cleveland Fed President Beth Hammack wanted the Fed to maintain the previous rate. And this is where there's a bit of drama. Governor Michelle Bowman voted no in November, the first time a governor voted against a rate decision since 2005. So I think we all know that the Federal Reserve shouldn't be cutting, but why are they cutting? Inflation's not down. We're seeing huge asset bubbles forming. But what was happening right before they announced they're going to cut interest rates? The banks were going under. They literally had to bail out the banks. Silicon Valley Bank, they bailed out the billionaires, something they shouldn't have done. FDIC insurance is only meant to cover $250,000, but they literally covered billionaire deposits because the whole system was about to tank. And what caused the banks to crash? Well, it was the bonds that they brought at low interest rates and high valuations. Then when the Federal Reserve started lifting interest rates, those valuations, those bonds crashed. So when people went to pull their money out, when they sold those bonds, they didn't have the money to meet the withdrawal demand. So this is the real reason why the Fed Reserve was cutting interest rates. So moreover, the Fed will have to deal with the impact of fiscal policy under President-elect Donald Trump, who has indicated plans for tariffs, tax cuts, and mass deportations that could all be inflationary and complicate the central bank's job. So what do you guys think about this? We'll have to wait and see how inflationary it will be. Obviously, it's not going to help inflation, but we'll have to just wait and see. Now, let's go into their economic projections here, or their change in the economic outlook. We'll go ahead and highlight this so it's a bit easier to read. So the cut came even though the committee jacked up its projection for a full 2024 gross domestic product growth to 2.5%. Again, when you factor in inflation and immigration, we're really seeing on an individual basis, on a per capita, we're seeing the standard of living decline. That's a 0.5 percentage point higher than September. However, in ensuing years officials expect GDP to slow down to its long-term projection of 1.8%. Not much growth at all, and negative again when you factor in inflation. The other changes to the summary of economic projections saw the committee lower its expected unemployment rate this year to 4.2%, while the headline and core inflation, according to the Fed's preferred gauge, were pushed higher. So they're lowering interest rates, even though they're saying that inflation is going to get worse. It doesn't seem to make much sense to me unless your goal was to inflate the markets and to bail out the banks and also help the US government service their debt. The committee's decision came with inflation not only holding above the central bank's target, but also while the economy is projected by Atlanta Fed to grow at 3.2% rate in the fourth quarter, the unemployment rate to hover around 4%. So again, I already went over the jobs data and how fake that was and how they're going to have to revise the jobs data. If the economy is doing so great and they're saying inflation is going to go higher, why are they cutting interest rates? So it says here, mortgage rates and treasury yields both have risen sharply during the period, possibly indicating that the markets do not believe the Fed will be able to cut much more. That's right. Like I just said, why are you cutting? Everything, according to them, is fine. The policy-sensitive 2-year treasury yield jumped to 4.3%, putting it above the range of the Fed's rate. In related action, the Fed's adjusted the rate it pays on overnight repo facility to the bottom end of the Fed funds rate, the so-called RPP rate. Is used as a floor for funds rate, which had been drifting toward the lower end of the target. Now, let's go over some indicators that prove that this stock market is due for a big correction. Not saying it's going to crash 99% overnight, which I'm sure a lot of you would want or want to see that kind of doom and gloom, but a big correction is coming because we're massively overvalued. So look at this. This is the S&P 500 PE ratio. Very simple indicator to use. How overvalued is the stock market to historic norms right now? Well, we can see here, the median is 15 and the mean is 16. Where are we right now? We are 30. Double the median and nearly double the mean. This is going to go down. This could be the roaring 20s 100 years later. This could be the 100-year cycle repeating itself. People were making crazy money in the roaring 20s. They were seeing huge stock market booms. People thought there would never be a crash. Maybe in the second half of this decade, we will see another Great Depression. Because if you want an indicator that we're at the top, just look at this. Meme coins like Fartcoin are riding Trump's victory to huge valuations. Experts say it may have only begun. Now, just taking politics out of this, taking Trump out of it, I'm just more talking about the meme coins. Fartcoin, huge valuation, experts. I don't think those words should all be together. You may think it's funny, and it is funny, but this is a clear sign that we're at the top, ladies and gentlemen. Fartcoin and meme coins are going up through the roof. Huge valuations, and experts are now weighing their opinion on this. So what do you guys think about this? Is this not a clear indicator that we are at the top? Now also this, household debt. If you want to grow an economy, you either have to get person's income to go up, or they have to take on more debt, make it easier to get debt. Well, we are at the highest debt in history, of the US history. We can see here, $18 trillion in debt. Non-housing, 4.9, nearly 5 trillion, and housing debt, nearly 13 trillion. Interest rates have gone up. People have maxed out their credit cards. They're not going to be able to take on much debt to keep this going. Now, also at the same time, insiders are selling. We've got multiple CEOs selling right now. Look at this. Nvidia's CEO keeps selling shares. Is it a red flag? I think it is. I think he's seen how much the stock has gone up, how much of a bubble we're in right now, and he's cashing out. He's like, later, suckers. You can take my bag. Mark Zuckerberg also cashed in another 153 million, and he sold 2 billion in shares this year. And Spotify CEO sells millions of stock after the latest price surge. So this may be a good time to take profits, not financial advice, but obviously this is what a lot of CEOs are doing. Now, another huge indicator, which has never been this high ever, is the Warren Buffett indicator. The GOAT investor himself, his indicator is strongly overvalued, and it's not just strongly overvalued, it's never been this overvalued. So this indicator takes how much is the stock market valued compared to the US economy. And right now, the stock market is 208% of the US economy. The US economy is around 29 trillion. The stock market is 60 trillion. And when you look at this historic chart, we have 2 standard deviations above the norm. Look at this. Never has it been like this. This is absolutely peak market mania. So I think the stock market is long overdue for a correction. What do you guys think? So again, the Federal Reserve isn't going to cut interest rates as fast as the markets want. They know they've kind of created an asset bubble. They're going to try rein it in, and a lot of people are going to start taking profits. So what do you all think about this? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.